Well, we're definitely excited about DeFi at Coinbase, and we want to make sure we help build the future of this technology here in America. Actually, a lot of traditional financial services firms are integrating this technology. I mean, everybody from JP Morgan, Visa and Mastercard, Franklin Templeton, they have projects and teams internally working on how to integrate crypto into their services. And I think the reason for that is that 80% of Americans are not happy with the current financial system as it is today. They think it's too slow, the fees are too high, it doesn't serve everybody equally, and a lot of the technology was built 40 years ago, the laws were 100 years ago, and so people are really excited about how crypto as a technology can help improve and update the financial system.
Welcome to Market Empire. Please watch the video to the end, hit the like button, and subscribe to the channel. Also, sure you drop your comments and observations in the comments section below. Thanks, and enjoy the video. An immediate and thorough reform of the current monetary system is required. Existing payment and financial systems have been criticized for a number of reasons, including being antiquated and inefficient. Over and over, the goal of the cryptocurrency industry has been to wean its users off of the fiat currency system. Many have argued that the decentralized ledger system is the only true solution to the mess created by traditional financial systems, and this argument is bolstered by the fact that Bitcoin emerged during the depths of the great financial crisis. It may have taken more than a decade, but the majority of Americans are finally on board with the idea that the current financial system needs to undergo significant reform. The majority of Americans, 67%, agree that the current financial system needs to be completely revamped or significantly altered, as reported by the Morning Consult Cryptocurrency Perception Study. Investors in cryptocurrencies have a slightly higher rate of success, but this is almost certainly due to their greater familiarity with the current financial crisis and the fantastic opportunities presented by the cryptocurrency market. Brian Armstrong, CEO of Coinbase, gave a candid interview to Bloomberg in which he shared his views on the recent regulatory crackdown of the cryptocurrency industry. We now present the interview with billionaire Brian Armstrong, in which he discusses the regulatory onslaught on the crypto industry and how he and other leaders in the industry are preparing for the coming battle.
You recently made this big, interesting bet as a centralized exchange on decentralization. A year or so ago, decentralization was a big worry for traditional financial players, but more so now, there are a lot of concerns about the space. So what is the case for traditional financial players to care about DeFi?
Yeah. Well, we're definitely excited about DeFi at Coinbase, and we want to make sure we help build the future of this technology here in America. Actually, a lot of traditional financial services firms are integrating this technology. I mean, everybody from JP Morgan, Visa and Mastercard, Franklin Templeton, they have projects and teams internally working on how to integrate crypto into their services. And I think the reason for that is that 80% of Americans are not happy with the current financial system as it is today. They think it's too slow, the fees are too high, it doesn't serve everybody equally, and a lot of the technology was built 40 years ago, the laws were 100 years ago, and so people are really excited about how crypto as a technology can help improve and update the financial system, and that's why we're here at Coinbase. We want to make sure that we enable that as well.
But there are still near-term challenges, and which are the biggest among them? Are they the idea of hacks and any vulnerabilities in the system, or is it the regulatory environment in the United States?
Yeah, I mean, my number one priority this year is the policy environment. So we need to make sure that that gets to a good place in the US. The rest of the world has actually embraced crypto. We've seen all the major financial hubs, Singapore and Hong Kong and London, and the EU just passed comprehensive crypto legislation. So really what I believe should happen in the United States is that we need a clear rule book so that this industry can be built here. We don't want it to be like 5G or semiconductors that went offshore. It's actually a matter of national security. We get the future of the financial system built here inside the United States. And so I've been spending more time in DC, here in New York, but in DC in particular, we're trying to meet with the relevant folks that could help draft legislation so Congress can come in and pass comprehensive legislation. Yeah, so crypto is many different things, right? There are crypto securities, which we believe there should be a robust market for that in the US. In fact, we acquired a broker-dealer license. It's still dormant right now, but we'd like to work with the SEC to activate that and create a healthy market structure to trade crypto securities. Now, of the 1,000 assets we've looked at Coinbase, 800 of them we've rejected. We don't think we have, maybe they're securities. 200 or so of them we have listed on our platform. We believe those are commodities. And so we're going to continue to build that piece of our business. We're regulated by the CFTC, for instance, and make sure we grow that piece as well. But crypto is many things. It's commodities, it's securities, it's stablecoins, it's artwork, it's decentralized identity systems. And so it's tough for people to wrap their head around, but it's ultimately going to have many different regulators.
You know, before we get to the regulatory part of this too, we were talking kind of about traditional financial players and what role they have in this place, in this system. What kind of relationship do you have to high-frequency trading firms? Prior to the implosion of FTX, you saw them working, for example, with IEX. Have you had any conversations with them or any others?
Well, we're always talking with different firms out there and other exchanges that may want to trade crypto in various ways. You know, we can act as a brokerage, or exchange, a custodian. We can play different roles in different market structures. And in financial services, you often see, you know, a company that may compete on one product, they're actually collaborators on another product. And so we want to make sure that we're helping integrate crypto into all aspects of the financial system so we can update the financial system.
So you were talking about the SEC, the CFTC, the SEC's crackdowns as of late in particular. You work with a lot of institutions. Hedge funds had been very much getting into crypto prior to last year. I'm wondering if the SEC's crackdown is starting to scare any of them away.
Well, in a way, actually, I think Coinbase has been a net beneficiary of this because there's essentially a flight to quality. You know, Coinbase, we're a public company. We have audited financial statements. We're a qualified custodian. I mean, we're basically the choice, you know, based here in the U.S. that hedge funds are going to want to work with. And so in Q4, I mentioned this on our earnings call, actually, that we saw an increase in the number of institutions onboarding to Coinbase. Now, a lot of them haven't deployed substantial capital to crypto yet in this market environment. They're kind of waiting and seeing. But it's great to see them onboarding, and that's kind of a coiled spring that I think could unleash a lot of potential in the next market change. You
were talking about how there are multiple regulators for the crypto industry, but who should be the primary regulator for stablecoins? And is there a case for them to be overseen more like money market funds?
Well, I think Congress ultimately is the one that's going to create the laws in the United States, right? And so we could probably use new legislation, new laws around how stablecoins should be regulated. I don't presume to tell them how to do that, but I think some of the key things are uncontroversial. I mean, we need to have one-to-one backing of assets behind these stablecoins. We need to have audited financial statements to make sure the firms issuing these are doing a good job. So these are just kind of basic good practices, and I think a stablecoin bill is one of the first things that could really help you know, get consensus and move things forward in DC.
To the extent you still have concerns around the stablecoin industry, what would they be?
I mean, as broadly as a concept, I don't have concerns about it. There may be individual stablecoins which are better or worse. I mean, we actually recently delisted, you know, BUSD as an example, and the reason we did that was, you know, Paxos had gotten, who's the issuer of BUSD, had been kind of ordered to stop minting it. So we were concerned about liquidity issues for our customers. But you know, we're always evaluating through our internal processes different stablecoins, different assets, and updating when we see new information that comes to light.
I'm curious about your own way of using stablecoins. Recently in the fourth quarter, it showed that, in your filings, it showed that USDC has doubled in your holdings prior to the quarter before. Why is that the case?
Well, okay, so USDC is growing quite a lot, and I think actually USDC is it's the best answer to a stablecoin in the United States, right? It's issued by Circle, which is a US-based company. We're in partnership with them, and we want to see that grow. It's also been a really nice source of subscription and services revenue for us, which is, you know, in contrast to trading fees, which are quite volatile. We've seen in our Q4 earnings that our subscription and services revenue is now 47% of Coinbase's revenue, almost half. And so that's allowing us to build a more predictable business with a diversified set of revenue streams. So yeah, I'm quite bullish on USD coin, and I feel like that's a good solution for the US.
Does that look a lot more like traditional banking?
Not necessarily, no. I mean, in traditional, there's many differences. You know, in traditional banking, there's fractional reserve, they have banking licenses, there's capital requirements. Everything in USD coin is backed 100%. There's no fractional reserve. So I think of USD coin as a really important tool to help payments be more efficient globally. It's helping provide, you know, access to, you know, something like a bank account, but it could be self-custodial for many people around the world who don't have access to a stable currency. It can improve even, you know, a lot of DeFi, which you mentioned at the beginning. The trading pairs are denominated in USD coin. So these are all good things which are an important part of the ecosystem.
You have been concerned, you've voiced concerns, you and your colleagues, about the SEC's definition of staking and how they've approached staking. Are you prepared to fight the SEC on any front if you need to when it comes to the staking world?
Yeah, so I mean, we recently saw there was a settlement with Kraken, that's another exchange out there, and they have what they called a staking product. It was kind of more of a yield product, but you know, in Coinbase's case, our staking product is not a security. There's many differences. I mean, customers never turn over their assets to Coinbase, for instance. They're always in the customer's possession, and we're really just providing a service that passes through those coins to help them, you know, participate in staking, which is a decentralized protocol. So that's an important part of you know, the crypto economy that we want to make sure that we ensure that that's out there. And you know, we're prepared to defend that in court if we need to, but you know, we're never looking for a fight. We want to work collaboratively with regulators all over the world, but you know, we have to follow rule of law, and in this case, I think we're well within the law. Given
the stance the SEC has been taking regarding defining certain assets as securities, is there anything that you think we'll need to get to that point? Mm-hmm.
Well, you know, the SEC has expressed their view about what is a security, and they've taken kind of an expansive view of that. You know, Coinbase, we've evaluated over 1,000 different assets, and as I mentioned earlier, 800 of them we've rejected, and we do think they have some properties of being a security, so we don't trade those today. Another 200 or so of them we do trade today, and we feel that those are commodities. So, you know, look, I think as a CEO, we want to basically just have a clear rule book, right? And if a clear rules are published, we're happy to follow it. And if those rules change, you know, we're happy to follow those. But I think, you know, when we became a public company, we explained to the SEC in our S1 filing and in dozens of meetings that we've had with the SEC, I think we work pretty collaboratively with them. We've explained our business to them many times, including in our S1, and you know, they approved us to become a public company. So we'll continue working with regulators all over the world about where the boundaries are on what's a commodity, what's a security, or what is something else.
You know, we're talking about the SEC and state regulators as well. You know, in regulatory filings, you've noted that you've received investigative subpoenas from the SEC and state regulators. How and when do you get those resolved?
Yeah, well, subpoenas are really just requests for information, right? And so we're in dialogue with regulators, not only here in the US at the state and federal level, but really around the world. I mean, we're in European markets and, you know, in Singapore and in Australia, et cetera, Canada, many different markets around the world. So I think subpoenas are an important part of the process. That's them asking us a question and saying, we'd like more information on this, and we're happy to do that.
There was a tension between the SEC and the industry before. It sounds like some of those tensions have boiled up after FTX. I'm wondering if you think that the conversations between Coinbase and the SEC in particular have gotten more or less contentious over the years.
I think we have a good relationship with the SEC commissioners and staff, and you know, I've met with the chair as well, and so we're going to continue to invest in those relationships. I would like us to find a way to bring crypto. I think this is what they want too. Our interests are aligned. We want to bring this industry within the regulatory perimeter so that we have good consumer protection, but we also preserve the innovation potential of this. And as I said earlier, you know, 80% of Americans want the financial system to be updated, and this is the most important technology I'm aware of that can help do that.
So you and your colleagues have also voiced a lot of concerns. Today you voiced concerns about kind of more of the crypto industry moving offshore. Mm-hmm. Draw us a picture here of what happens in 5, 10, 20 years if the digital asset landscape exists mostly outside of the United States.
Yeah.
In exchanges that are not based here.
Yeah. Well, I mean, look, I think that would be a terrible mistake for the United States. I mean, look at what's happening with AI, right? That's an important technology trend where it's becoming a matter of national security, right? That some of these things are built in the US. Or we saw it in the past with 5G or with semiconductors. And so if we have this really powerful technology, cryptocurrency, that has the potential to update the financial system and improve it in so many ways, how can we sit on the sidelines in America and say, oh, okay, well, we're going to let, you know, the EU pass comprehensive legislation, and so it'll be built there, and we're going to let the UAE and, you know, London and Singapore and Hong Kong. I mean, this is America. We need to be a technology hub. We need to be a financial hub, and the future of this industry needs to be built right here in America.
Do you think that the SEC's onslaught of regulations will force cryptocurrency platforms to move overseas? How do you think this will affect the economy of the country and the growth of digital assets in general? Please leave your answers, thoughts, and comments in the section below. If you liked this video, please like it, subscribe to the channel, and watch some of our other videos about crypto. Thanks for watching.